Hello, everybody. Welcome. Welcome. Let's get started. Tesla stock is down. Sorry, Tesla's like up today, up 3%, between 2 and 3%, kind of gyrating throughout the day. The stock is down about 14% last month. And overall markets are down. Dow Jones down 0.4%, Nasdaq flat, S&P 500 flat, Russell 2000 down 0.6%. Any questions, comments, please request to speak. Everything seems to be fine. Yields are flat today. 10-year treasury yields at 4.56, 30-year is at 4.78. There's a bit of a steepening of the curve. This morning we got the mortgage applications index still very, very low. Housing starts dropped as well, 1.366 million as opposed to 1.4 expected. Housing market seems to be going into a recession finally. Home prices are turning down. Housing activity, construction activity is turning down. And I suspect that's going to have an impact on the overall economy in the coming years, but we'll see. Let's look at the overall market here. European results day share volatility emboldens longer-term investors. Unusually high volatility in the shares of European companies around their earnings days has prompted a growing number of typically cautious long-term investors to jump on big price swings. Interesting. Volatility in European shares on results day has reached a near record high, Bank of America data shows, with the fourth quarter earnings season only around half complete. Tom Lemegri, portfolio manager on European equities team at Janus, was among the long-term investors Reuters spoke to who have found opportunities in the current volatility. If you have something that looks incredibly oversold, I can buy more. And if something looks overbought, I can profit too. It allows you to be tactical, the portfolio manager who manages $8 billion in assets. I always want to be doing this alongside taking a longer term view. If something falls 20% in one day and I've got a 3-year time horizon, then it can be seen as an opportunity to potentially add or start the position. No shit, Sherlock. A Reuters analysis in 2024 found hedge funds taking a wide range of trading approaches and a changing market structure were behind the trend that has spurred signal stock volatility to multi-year highs. Interesting. Bank of America's most recent data shows that companies that missed fourth quarter expectations have recorded a median one-day performance of 2.6%, the biggest since the bank's reporting began in 2012. Those beating earnings per share have recorded a median outperformance of 1.7%, the second strongest on record. Barry Glavin, head of equity platform in M1D, Europe's largest asset manager, also said his team has noticed the trend of outsized reactions to results. As disciplined long-term investors who are quite price sensitive, if we get an opportunity to buy a stock at a lower price and our investment thesis unchanged, we'll take it, he said. Interesting. Yeah, this is very interesting. I haven't really seen this on X anywhere. Big moves both ways. European companies' quarterly reports have so far proved generally rosy as expected. Shares of French luxury giant Richemont recorded biggest daily jump in 17 years on January 16th, surging 16% after results beat expectations. We're seeing similar in the US as well. Companies are reacting 10-20%, which could also mean lower depth of markets, which is something I've been expecting. So maybe it's happening now. I'm gonna look for data on this. European companies' quarterly reports have so far proved generally rosy. On their respective results days, shares in Dutch payments firm Edion rose 14%, and Germany's Infineon jumped by more than 10%. Among the companies that saw their share price fall sharply, Swiss lender UBS dropped 7% on its results day. Cognac maker Remy lost 7.4%. Randstad, the world's largest employment agency, fell 6.5%, and Europe's largest travel operator slid more than 10%. Among these Galavans said that while volatiles may be uncomfortable, it can offer active long-term managers an opportunity to add value. Over RBC Blue Bay Asset Management, senior portfolio manager and head of European equities, David Lambert, said his team would buy shares in an appropriately valued business after results it sees outsized move on the unchanged luck. We would trade around those, etc. Long term, you have to be nimble, blah, blah, blah. Okay. So the takeaway from this article, Rogers article titled European Results They Share Volatility Emboldens Longer Term Investors. Earnings reports have seen unusual high volatility with both positive and negative reactions. We're seeing the same thing in the US, which I think is really interesting. Like, for example, today Etsy is down 8%. Worldwide, Wolverine worldwide is down 21%. Bumble is down 28%. Solar Edge is up 26%. So, it could potentially mean declining depth in financial markets, which is something to watch out for. Any questions, comments? Please request to speak. Otherwise, I'll mute. Let's see what else is new here. Oil prices are up a little bit to $72 per barrel. Natural gas is up a lot, 5% today as well. Natural gas prices have been surging in recent days. Let's see. I want to see a couple of comments from on the macro front. There might be a deal between Russia and Ukraine, although Ukrainian comments are opposed to that. So, next Monday, Jensen is going to give a speech at a keynote speech. And I'm going to be looking out for that. NVIDIA stock has been running quite a bit. But what I'm repeatedly seeing is that the use of AI products is not increasing as rapidly as in 2023. So it seems to me that there's a bit of a stalled progress on AI adoption in late 2024 and early 2025. So something to watch out for in terms of demand for AI chips and hardware. The US market has now tilted in favor of buyers with 3.7 months of supply sitting on the market in January, the most in 6 years. But with high home prices and mortgage rates elevated, buyers don't feel like they have the advantage. We're seeing tremendous slowdown in housing activity, construction activity, sentiment for home builders. Toll Brothers today, for example, is down 8%. Toll Brothers is down 8% today alone. And in the last 3 months or 2 months, Toll Brothers is down about 35%. So I think housing market, the shoe may be falling here. On the other hand, the markets are worried about the Fed rates staying higher for longer. So that's an interesting combination because shelter comprises nearly half of core inflation. So if home prices turn down, I think we can see inflation numbers come down really fast, which obviously increases real interest rates unless the Fed takes action and cuts interest rates further. Let's see what else is new on the macro front. MicroStrategy set to seek below range conversion premium on notes. Interesting. MicroStrategy is down 2% today. Bitcoin is at 96,000. It's been below 100,000 for the last couple of weeks here. Housing starts to decline 10% month over month in January, according to Double Line, to a seasonally adjusted annual rate of 1.366 million versus single family starts decrease 8.4% month over month, while multifamily starts decrease 13.5%. So there's very material slowdown in the housing construction market. On Tesla front, I'm noticing product after product in China from Chinese automakers that are better than Tesla's. And it's not just Tesla sales that are hurting, it's also um, European automakers' EV sales are sharply dropping as well. So Chinese automakers are taking over the China market. Obviously, it's the biggest market. So at the top of our screens is a graph, Tesla China weekly sales. So if you haven't seen people talking about insurance registrations of Tesla China, that's because they've been low. And some people say that the new Model Y will change this trend, but I highly doubt it because if you kind of go down to the product level, Chinese automakers are now producing Model Y competitors that are half the price, that have similar range, if not better, and they charge faster and they have better ADAS systems than FSD. So I don't see how this trend can turn in China. If anything, I think it's going to spread into Europe because BYD, for example, is looking to expand into Europe. They're building a factory in Turkey, which obviously they're going to use to export into European markets. So the intense competition Tesla is seeing in China is going to expand into Europe as well. And Tesla already isn't doing well in Europe. So it looks like Tesla sales are pretty much limited to Tesla, any sort of hope is limited to US market. And that's because the Chinese automakers aren't allowed to compete here. Let's see. Um, so that's at the top of our screens. I'm going to post one more thing about approval ratings for Doge. Do you approve or disapprove of the job Elon Musk is doing at Doge? Out of the they polled about 1,000 people. 40.5% said approve, 45% said disapprove. So, and that 14% neutral or no opinion. So majority of people disprove. This data is at the top of our screens. You can check it out. The source is in a reply to that tweet. And this was, by the way, before what we just heard about the claimed savings of $8 billion in one contract, which is actually $8 million. So that's an error of about three orders of magnitude that is leading to overstatement of savings, which is kind of what I expected anyway. And it's unfortunate, but this is not, so far, they haven't been able to do any material decrease in spending. And I don't think that's going to happen. I think year over year, the spending will increase despite the hype. Troy posted also at the top of our screens a tweet talking about 2025 deliveries. So Troy says, I think it's clear that this will be another down year for Tesla, and the decline is likely to be steeper than last year's negative 1%. And I agree with that. And I add that I think it's going to be more around 1.6 million as opposed to 1.7 that I think Troy is expecting. So I think as Q1 progresses, I think people will realize the Tesla is facing 2 consecutive years of down growth. Any questions, comments? Please request to speak. So that means if you have 2 consecutive years of negative growth and 100 to 200 P ratio, I would expect a massive drop in the Tesla stock price. If you haven't read my article published on Seeking Alpha, I highly recommend it. Um, I explain how I reached my estimate of a drop of 80%. I pinned the tip of the screen. It's also pinned on my profile. This has been my most read article of all times. I've been writing on Seeking Alpha since 2016, and I think it's for a good reason. The comments are also very favorable. People like the analysis, and I boiled it down to 3 reasons. So that link is at the top of our screens. All right. On that note, that's good enough for today's summary. I'm going to chat with you all tomorrow. Take care.